Hey, George. Thanks for reaching out about that 99% win rate strategy.
Wow.
We figured this is something a lot of our listeners would want to deep dive into as well, so thanks for
Sure.
requesting it. November 21st, 2024, made now. That's today's date, just in case anyone's time traveling.
Yeah.
And hey, while I've got you for a sec, don't forget to smash that bell icon below so you never miss one of these deep dives.
Yeah, what's crazy is that this whole thing came from like just a regular Binance Square user.
Not some, big Wall Street hotshot.
Exactly.
Yeah.
Just goes to show how things are changing, right? Like all the info and strategies are out there for everyone. It's pretty exciting.
Yeah, absolutely. And that's what we're all about here at dailycryptotalk.com.
For sure.
Giving you the knowledge and the tools to, make it in this crazy crypto world.
Absolutely.
So enough with the intro. Let's get into this strategy. So this one's all about moving averages, specifically the 5-day, 15-day, and 30-day.
The 30-day is like the big one here.
Yeah, it's like their lifeline.
Yeah, if it dips below that 30-day, they're out.
Yeah, no messing around.
No messing around.
So for those who haven't been following us since the beginning, I'm sure most of you have, moving averages are those lines on the chart.
They basically smooth out all the crazy price jumps.
Right. They show you the trend.
Exactly.
Okay, so let's say you're looking at a coin you want to buy.
Right.
This strategy says you got to split your money into 3 parts.
Equal parts.
Yeah. So when the price goes above the 5-day moving average.
Boom. You buy the first part.
Exactly. Like dipping your toes in the water.
Right. You're not going all in just yet.
Then if it keeps going up and breaks above the 15-day average.
Bam. Second part. You're feeling more confident now.
Now you're committed. But you're still holding back a little bit, right?
Exactly. Gotta be smart about it.
And then finally, if it breaks above that 30-day average, that's when you go all in with that last third.
That's when you know it's the real deal.
Right. So the whole idea is to manage your risk.
Yeah, you don't want to put all your eggs in one basket right away.
Exactly.
Yeah.
You're scaling in as the price confirms the trend.
Makes sense, right?
Totally. Now here's where it gets even more interesting. The selling part.
So if the price doesn't keep climbing after you buy some.
Like if it stalls out after you buy that first third, but it's still above the 5-day moving average.
You just hold on. You don't sell until it dips below the average you bought at.
As if it dips below the 5-day after you bought the first third, you sell that third.
Exactly. Got to cut your losses fast.
Yeah, be disciplined. Don't get emotional.
Emotions will mess you up in this market.
Okay, so then what about selling when the price starts going down?
Same idea. You sell in stages based on those moving averages.
Okay, so like first you sell what you bought at the 30-day average.
Right. Then if it keeps dropping below the 15-day, you sell that portion.
And finally, if it goes below the 5-day.
You're out. Sell the rest. No point in holding on at that point.
And if it drops below all 3 moving averages?
That's like a giant red flag. Get out!
Like a fire alarm going off. Run!
Exactly. So it's all about taking emotion out of it. Right.
Totally. It's a system. You follow the rules. And that's exactly what George was asking about. But, and this is important, this is just one strategy.
Just one perspective.
There's always more to the story.
Yeah, we got to look at the pros and cons, the good, the bad, and the ugly.
Which is exactly what we're going to do in the next part of this bonus session.
Yeah.
So don't go anywhere.
Stick around. We'll be right back.
Take control of your crypto journey with Binance, the platform trusted by millions. Trade over 350 coins with low fees and powerful tools for every skill level. Ready to get started? Hit the link on this page and join Binance today.
All right, so we're back for part 2, George, and everyone else, make sure you hit that bell icon so you don't miss any of these deep dives. But anyway, we're really going to dig into this 99% win rate thing and see if it's cracked up to be.
Yeah, 99% win rate, come on. Sounds a little too good to be true.
Right, got to be realistic.
So let's put our thinking caps on and see what the pros and cons really are with this approach.
One thing that jumps out right away is how simple it is. Just using those moving averages, it's like having a clear roadmap.
Yeah, like if you're new to trading and you're like, whoa, all these charts and numbers are freaking me out.
Exactly. It can be overwhelming.
So this gives you like a set of rules to follow.
Yeah, it takes the emotion out of it, which can be a good thing.
Because emotions can really mess you up in crypto.
Big time. And it's not just about, when to buy and sell.
It's about managing your risk, too.
Like we talked about, scaling and gradually, cutting losses quickly.
That's super important for staying in the game.
Absolutely. Got to protect your capital.
But of course, there's some downsides, too, right?
Oh, yeah, for sure. Nothing's perfect.
One thing that kind of bugs me is how rigid it is. It's just those moving averages, and that's it.
Yeah, what about all the other stuff that can affect the price?
Exactly. Like, what if there's some big news or regulation changes?
It's like this strategy assumes the market only cares about those lines on the chart.
And we know that's not true. There's always something else going on.
Like market sentiment, that can play a huge role.
Oh, yeah. Fear and greed can really drive the market sometimes.
So just using moving averages, you might miss out on some big opportunities or even get caught in a downturn.
Right, because you're not paying attention to the bigger picture.
And then there's the whole psychology thing, you know?
Yeah, like what if you get that gut feeling that a coin is going to go up, even though it's below your moving average?
Do you stick to the rules or do you trust your instinct?
Tough call.
That's where experience comes in, learning to read the market and make those judgment calls.
Yeah, no strategy can replace good old-fashioned market knowledge.
And honestly, that 99% win rate sounds a little fishy to me.
Right? Like, come on. 99%, no way.
We don't know how this person actually traded. They could be cherry-picking their best results.
Exactly. Past performance doesn't guarantee future results, right?
Absolutely. That's like rule number one in investing.
So, George and everyone else listening, don't just take our word for it, or this Binance Square user's word.
Do your own research. Test it out. See if it works for you.
Yeah. Backtest it against historical data. See how it holds up in different market conditions.
Because the crypto market is always changing. What worked yesterday might not work tomorrow.
And most importantly, think about your own risk tolerance. Are you comfortable with the potential losses?
Right. What's your trading style? Are you a risk taker or do you like to play it safe?
Yeah. Figure out what works best for you.
There's no magic formula, no one-size-fits-all approach.
So as we wrap up this part, George, I hope this has given you some food for thought.
Yeah, some things to consider before jumping into this strategy.
In the final part, we're going to give you some more resources and some final thoughts on navigating the crypto world.
Stick around. We'll be right back.
Tired of guessing the market moves? Switch to TradingView, the go-to platform for traders. With advanced charting tools, alerts, and a strong community of traders sharing insights, you'll always stay ahead. Join TradingView for free now. Click the link on this page and trade like a pro.
And we're back. Part 3 of our deep dive into this 99% win rate strategy. Remember to hit that bell icon if you haven't already, for notifications and all that.
So we've really gone through the nuts and bolts of this thing, right? Showed you how it works, the good, the bad.
Yeah, try to give you the full picture. So what are the big takeaways here? What should people remember?
Well, first off, it's a system, right? It's all about using those moving averages, taking the emotion out of trading, which can be a good thing for a lot of people.
Yeah, like if you're the type who gets all stressed out watching the charts all day.
Exactly. This can help you, stay disciplined, stick to the plan.
And this is a big but.
Always a but.
No strategy is perfect. The crypto market is crazy.
Totally unpredictable.
So don't just blindly follow any system, even one that says it wins 99% of the time.
Yeah, do your own research. See if it really works.
Backtest it. See how it would perform in the past.
And think about yourself, Like, are you comfortable with risk? Do you like following rules?
Yeah, find what works for you. No one size fits all in crypto.
And George, hope this was helpful for you.
Yeah, hopefully you can make a good decision now about whether this strategy is right for you.
And for everyone else, keep learning, keep exploring.
The crypto world is always changing. That's why we're here at dailycryptotalk.com to help you navigate it all.
So hit that bell icon, stay tuned, and we'll see you in the next deep dive.
Until then, happy trading, everyone.